Guys, welcome back and happy Mother's Day to all the viewers out there. This channel passed the 11,000 milestone over the weekend because we just came off one of the most historic weeks for the memory sector. In fact, I think it was the most historic week since the 2008 timeframe. And while the world watched Micron rip for 15% on Friday and SanDisk for 16%, there is a high stakes zero-sum game that began in Seoul. Tonight, mediation talks are ongoing between Samsung and its largest employee union. And if these talks fail, an 18-day strike starting May 21st could in fact wipe out 4% of the world's DRAM supply in a single afternoon. This is why the smart money didn't wait for Monday. They dropped almost $3 billion on Micron at the closing bell on Friday. They aren't trading a cycle. They are buying supply insurance right now. And tonight, we're going to break down the end of the cyclicality. I'm going to show you an article by Wall Street Journal. We'll discuss the $42 billion SanDisk backlog, the Samsung zero hour that has begun, and the implications for the market. And I'm going to lay out a mathematical path for Micron and how it could hit the $1 trillion club. Plus, I'm going to give you my plays and how I'm going to look at Monday morning's opening bell. So let's get into it. Let's look at the ground truth. But if you haven't done it already, make sure you hit like. Make sure you hit subscribe to the channel. Let's keep this channel growing at the pace it is. Let's get started. First, I want to show you how even the legacy desks at the Wall Street Journal are finally waking up to what we've been tracking in the dark pools and what we've been discussing about the memory sector for months. Take a look at the article that was posted today in the Wall Street Journal titled "Chip Stock Juggernaut Shows No Signs of Slowing Down. Soaring profits have investors pouring into shares of CPUs, GPUs, and memory chip companies." So if you haven't seen that article, I encourage you to pull it up and read it because it's a real bullish signal for the sector overall. Because when they highlight, you're seeing massive rotation of capital into CPUs, GPUs, and crucially into the memory chip companies. The Wall Street Journal is finally confirming the scarcity economics that we've been discussing for months on this channel. And when the mainstream media starts using terms like soaring profits to describe the memory sector, it tells you that the institutional shift is complete. We are moving out of the speculation phase and into a high-margin strategic infrastructure cycle where companies that own the data storage layers hold all the cards. And in the old days, companies bought memory just in time. But today, they are buying just in case. The institutional whales are focused on two big numbers with SanDisk that they believe essentially de-risks the story or the fundamental story for SanDisk. And let me show you those two numbers. Pull them up on the screen. I have them highlighted here in green for you. So it's contract liabilities and remaining obligations. And when you see $500 million in contract liabilities and almost $42 billion remaining performance obligations, this isn't just a sign of good demand for SanDisk. It's a sign of a total structural pivot for a company that once was a slave to the memory cycle, that once was a slave to the boom-bust cycle of the pasts. By securing these multi-year firm financial commitments, SanDisk has essentially locked in its 78% gross margin for the foreseeable future. Plus that $42 billion backlog, it acts as a massive revenue shield for the company. It provides the type of visibility usually only seen in high-end software firms, not seen in hardware firms like SanDisk or the other memory players. So it also proves that the hyperscalers aren't just buying SSDs. They are desperate to guarantee capacity at any cost to fuel their AI clusters. And if you remember the exclusive article we shared last week around how the hyperscalers and the big tech firms were negotiating with SK Hynix to get a seat at the table, they needed guarantees through the 2027. I think those numbers right there are demonstrative of that. When you're seeing contract obligations, performance obligation, that backlog of $42 billion, it's just showing you how desperate these companies are to get their hands on this advanced memory to help to ensure that they can work through the bottleneck, the biggest bottleneck that we see in the market right now. This creates a floor for investors under the stock that historically didn't exist. And the memory titans right now are they are the cleanest way, in my opinion, to play the AI infrastructure boom with guaranteed long-term pricing power. Last week, we also saw the Bernstein report and how they mentioned the Memflation and mentioning that DRAM prices are up 57% just in the last few weeks. I want to show you Micron's cloud memory and the performance, the revenue that they're seeing in the cloud. You guys remember it from the earnings report, but it's right there in the second bullet point of 7.75 billion for cloud memory revenue in the fiscal quarter Q2 of 2026. We also know the amount, if you look to the left, the amount of HBM3 memory that's listed by NVIDIA in every one of their Grace Blackwell racks. So 13.4 terabytes overall. But take a look at that cloud memory. Nice margins too, right there. Gross margin 75% for Micron. But look at how it's grown from quarter over quarter. So looking at quarter 2 of 2025 to where we landed quarter 2 of 2026. 2.9 billion to 7.7 billion. Massive growth overall for that cloud memory with Micron. That's the type of demand that we're seeing in the market right now. This memory unit is operating at gross margins over 70%. This isn't peak territory. This is a new basement for a world that cannot build without this silicon. And unlike legacy memory, HBM4 is being co-designed with the GPU logic. So when Micron designs a 36 gigabyte, 12 high stack for NVIDIA's Rubin architecture, they aren't a vendor anymore. They are a foundational partner to the company. And you can't swap out a custom logic memory die midstream. This creates a multi-year moat that the old cycle never had. That's why it's structurally different now. That's why you see the companies being re-rated differently and how the demand is out through the 2027, 2028 timeframe. The whales aren't just buying the Micron moat, though. Right now, in the real time, we are hedging against a potential massive production hole in the East. The stability that we're seeing with SanDisk and Micron, those massive moves that we see, are also being amplified by the chaos that we're seeing in Samsung right now. We're moving from a memflation scenario to a supply vacuum scenario as Samsung potentially prepares for their lines to go dark on May 21st. So let's dive in and take a look at that story and what exactly it means to the market overall. Because you guys have been tracking it. I've seen many members on the channel drop some comments over the last few days about this, but the Samsung factory strike may push DRAM and NAND prices even higher. So an 18-day walkout could cut memory output, disrupt recovery for weeks, and deepen shortages already driven by AI demand. So this is a massive story that we're seeing in the market right now. There's mediations tonight, as I mentioned. So we have to keep our eye on the news to see what the outcomes of those mediations will be, because either way, it's going to have an impact on the market on Monday. This isn't just a minor labor dispute, though. It's a systemic threat to the global AI build-out. The Samsung Electronics Super Enterprise Union, it represents about 74,000 members, and they're in a high-stakes standoff with management. The union is demanding 15% of the company's total annual operating profit to be distributed as employee bonuses. So remember that their operating profit is projected to be about $235 billion for 2026. 74,000 members, that's a massive bonus. I think I'm just quick math. It's like $470,000 bonuses per member. I do not see any way that Samsung's leadership team or their management team will agree to that level. But with nearly 80% of their union members belonging to the semiconductor division, if the mediations fail tonight, we are looking at an 18-day general strike that'll start on May 21st, as I mentioned. And analysts are already saying, analysts at Citi have committed or have slashed Samsung's profit estimates by 11% in anticipation of these payouts. And let me show you what TrendForce put up the other day, just looking at the impact that it could have. So a couple of things I want to call out here. If you look in the middle there about the impact, the output impact is 3%, right? So analysts warned that this strike could knock out 3 to 4% of global DRAM supply and up to 3% of NAND capacity. In a market where Micron is already pre-sold through 2026 and SanDisk is sitting on a record of customer advances, even a one supply hiccup acts as a massive price multiplier. The other piece I want you to look at is just the recovery period on their needs. You can't immediately come back and start again. It's going to take 2 to 3 weeks post-strike recovery to get the clean rooms back to where they need to be. So this is going to have a significantly longer impact if they do strike them beyond just the 21 days. Because, like I said, if they go dark, the recovery period for those automatic clean rooms can take an additional month. They say 2 to 3 weeks. Some say a month to stabilize. And this will create a periodic supply mismatch where pricing power shifts entirely to the secondary players. For Micron and SanDisk, this isn't just a headline. It's a direct catalyst for another double-digit surge in contract prices as hyperscalers scramble to de-risk their supply chains and move their orders to a more stable Western-based fabs. The biggest hyperscalers based on TrendForce report here, they're at risk. They mention is Google and Amazon. You know, the major players that could face delays. But it's not just those. It's all of the hyperscalers that have deals with Samsung. We know each and every one of them. Samsung's a massive player. So there's going to be significant impact across the board. So ultimately, this story is all about supply diversification, I would say. Every hour that the strike looks more likely, capital flows out of Korea and into the U.S. supply chain. That's why we saw that $3 billion whale trade last week on Micron, because it wasn't a bet. As I mentioned in the beginning, it was a move for supply insurance overall. So they were moving ahead of this potential and hedging against this strike that we could see on the 21st of May. But let's talk about what we did see, because while all that chaos is happening in Samsung, we did see something significant with the company on May 6th. Let me pull that up. So Samsung on May 6th is now in the $1 trillion club. As I mentioned, there's only 13 companies that are in the $1 trillion club. You can see them on the screen here. A significant number of them are in the high tech, as you would imagine. But we have Apple, Amazon. I mean, you have Microsoft, you have Google, Meta, Tesla, NVIDIA. So essentially you have all the Mag 7 companies, TSMC, Broadcom, and then the newest entry underneath Walmart here on the far right is Samsung Electronics. And like I said, it's 13 companies. What we're tracking here is, will Micron be number 14? That's what we talked about in the video, I think yesterday or the day before, that the countdown now begins. And as of Friday's close, Micron sits at a market cap of $842 billion. To hit $1 trillion, Micron needs to reach a share price of approximately $885. So what will a $1 trillion club, if they get into the $1 trillion club, what will it mean for Micron? Because joining that $1 trillion club, it isn't just about prestige. It's not just any number or just a headline. It triggers a passive buying wave for the company. S&P 500, NASDAQ 100 funds will be forced to reweight their portfolios, creating a permanent multi-billion-dollar bid under the stock. Micron will be transitioning from a cyclical chip maker to a global infrastructure utility, just like we've talked on the channel. And currently, right now, Micron trades at a forward PE that is 50% lower than NVIDIA's. As the market stops to see Micron, is when it stops seeing Micron as the cycle play and starts seeing it as an AI utility play, that multiple will expand. And if Micron catches just half of NVIDIA's valuation multiple, we're not just going to look at a $1 trillion company. We are potentially looking at a $2 trillion valuation for Micron. And if you remember in the after hours on Friday, we saw those $177 million and $408 million prints for the company in the dark pool. The whales are aggressively front-running the possibility that Samsung goes dark on May 21st. If that strike happens, the American foundry or Micron as a whole is a key American player. It isn't just a trade. It becomes the only viable supply chain provider in the Western world. So here's how I'm going to play the Monday morning opening for me. It's exactly what I'm looking at as we come in, how I'm going to play the memory titans overall at the opening bell. First, tonight, we have to watch the Seoul news, though. If the union mediation fails, expect a gap up at 9:30 tomorrow morning. The market will instantly pivot to the American players as the only safe supply chain players out there. So we have to keep our eye on those news tonight. I'll drop something on the channel if I hear or see anything. But overall, for Micron, the way I'm playing it, I'm going to look at that 747 level. We know we just finished under that on Friday. If we open above this and hold for the first 30 minutes, that $3 billion whale trade on Friday is the confirmation that this stock is going to start to make its run to 885 and that $1 trillion club overall. But first, we've got to break through the 800 psychological level. But don't chase the opening. That's my recommendation. Don't chase the first candle that you see. I would recommend waiting till about 10 a.m. Let the institutional dip, see if it comes, or let's see if the bid holds, if we can hold that 747 for Micron. For SanDisk overall, let me pull it up. I got a slide for you. For SanDisk overall, just to remind, we know where we closed. We closed at 1562 overall. Right now in the after hours, it's essentially flat. I think it was down 45 cents, so it improved from where it was on Friday. But in my opinion, I think if we can break towards that 1565 level, then we'll be in blue sky territory. There'll be no overhead resistance with the stock. If it clears that 1565 level, it could make a run to 1600 by lunchtime on Monday. And then we look at the storage kings, and let me pull those up because we've got here Western Digital. I'm looking for Western Digital to push towards that 500. It's at 480. It's been hanging around there. It's essentially flat in the after hours. It's about 50 cents high last time I looked. So sitting about 480.66 right now. But I'm going to watch to see if we can make a move to 500 with Western Digital. It has been lagging the other pure play names. It's been lagging behind Seagate. It's been lagging behind SanDisk as other pure play names in this market. But the catch-up trade is coming for this stock. I just feel it. Investors will move toward Western Digital in a hunt to find value in the storage stack. And finally, Seagate. We know how Seagate finished. They finished at about 782 at the close. Overall, you can see in the after hours, they're up about $2 more. So putting on a little bit more, but I think Seagate, in my opinion, right now is the stability play. It's had so much room and run over the last few weeks. I think we're going to watch that 782 level. If Seagate starts to lead, if we see that one take the lead within the sector, it is a huge sign that the institutions are moving into those deep value plays like Seagate, like Western, just to ensure that they're locking up the storage kings and the massive play and kind of the impact and the relevance that they have in the AI build out. That cold storage is so important overall. But guys, that's how I'm looking at it on Monday. As I said in the beginning of the video, we passed the 11,000. I think we're just over 11,200 now subscribers for the channel. And I believe it's because we follow the data, the true signals in the market, and we block out the noise and the hype. Samsung strike, the $42 billion SanDisk backlog, the Micron $1 trillion countdown, and all converging at once in the market this week. If you want the institutional whale perspectives, the insider trade news every single day, and to look at how the flow of the stocks are moving each and every day, then make sure you hit that subscribe button. Make sure you become part of the community. Join the channel. Let's keep the momentum going. Drop your comments, your thoughts, your questions below. I look forward to engaging with each and every one of you. I hope you have a great Mother's Day, and I look forward to seeing the next one. Take care, guys.